Okay, so we're moving into the area of public sector and public sector governance, Chapter 8. This is certainly an examinable area. We've seen the SBL examiner in the past veer towards, rather than profit-making entities, the public sector. And sometimes students find difficulty in this area, perhaps because they're used or more inclined towards companies that have wealth maximization or shareholder wealth maximization at the forefront of their minds. Let's take a look at what we have here. I think the first area to consider is the different types of organization that exist in the business environment. So, sectors. So, really three main ones. The first is the private sector. As just mentioned, within the private sector, we're looking at profit. We're looking at entities that are profit seeking, and indeed in the main, whether or not they're private limited entities or indeed private companies that are listed, in effect owned by shareholders, the idea of shareholder wealth maximization is at the forefront of their minds, the forefront of the board of directors and the forefront of management. It's about a return to shareholders in the form of dividends and indeed capital growth. So that really is the essence of the private sector, shareholder wealth maximization. Now, next area for us is public sector, which is really the essence of this particular chapter. So the public sector, or certainly one side of it, we're talking about government-owned service providers. So, for example, schools, hospitals, etc. The next area for us is what is now referred to as sort of third sector, or indeed not for profit, although you could say that the second area, in other words, the public sector, is also not for profit. So really three main sections so far. The first, the private sector, and that it would include obviously listed companies and privately owned entities. The second, public sector, for example, schools, hospitals, etc., certainly government-owned, government-backed, and indeed the third sector, not-for-profit, generally sort of volunteer-based and helping good causes. Okay, so let's look at more detail in terms of the sort of characteristics of each of the three areas. So as we've said, private versus public versus third sector, sometimes referred to as NGOs, non-governmental organizations. So first things first, who controls them? Well, clearly in the private sector, whether or not it's a private limited company, in other words, owned by private individuals, shareholders are relevant. If it's a listed company, again, shareholders are relevant. And indeed, what are they after? Certainly performance. In terms of the public sector, remember what we said up top. We're talking about government-owned or government-backed or government-run entities. We're talking about the state. The control of those entities is in the hands of the state, the government. Third sector, remember NGOs, really volunteers, or if you will, volunteers assisted in terms of management by trustees or boards of trustees, or perhaps boards of governors. Okay? So there's the control aspect. Notice the difference. In terms of the primary purpose, as we've said, within the private sector, it's about profit. And indeed, within that profit, a return or indeed a distribution to the owners, whether or not they're private individuals or institutions, VC companies, angels, or whatever. In terms of the primary purpose of public sector entities, certainly it's about public goods and indeed services. The example that I gave, or schools, or perhaps hospitals. And more often than not, in one sense or another, generally these goods and services are not provided, certainly in a public sense across the board and easily and readily available, by the private sector. Okay, that's not to say that you won't have private hospitals, obviously, and private schools that are on a for-profit basis. But we're talking about public. We're talking about delivering goods and services to the entire public, not just a section that can afford perhaps high hospital fees or indeed high private education fees. In terms of the third sector and the purpose, I guess, meeting needs that are not met elsewhere, i.e. not met by the private sector and indeed not met by the public sector. We might be talking possibly about charities for the homeless, possibly children in need, etc. So in one sense, I guess, third sector sort of fills a gap. It fills a gap that hasn't been filled by another entity. In terms of performance, we know that the private sector is all about performance. Profitability is key. There will be other aspects as well, but certainly profitability is right up there at the top, because profitability, in effect, will drive a return, whether or not that's the return, let's say, to shareholders in the form of dividends, or possibly even linked into that, when we have profitability over time, we're going to have capital growth in the value of the shares. But there may be other aspects, for example, a return in terms of interest, which will have to be covered by profitability. In terms of the public sector, performance criteria geared not so much to profit in any way, but to value, or indeed VFM, value for money. And I'll ask you to note in this area something that we'll see a little bit later on, called the 3 E's: economy, efficiency, and indeed effectiveness. When we have entities such as the public sector entities that aren't measured or don't really produce a profit, as it were, we have to have a way of gauging their performance. And really this idea of VFM is hinged on the 3 E's. More of that later. In terms of the third sector, remember, they're sort of plugging a gap that isn't plugged by other entities. Again, value for money. The third sector, these NGOs, they're not about making a profit. They don't have shareholders. They're not about making a return to individuals who require a distribution of some kind or require some sort of capital growth on their investment. So in essence, these are the main characteristics. So we've sort of set up this chapter in the sense of looking at these 3 main areas. And what we'll see as we go further on is that they operate in slightly different ways. They're managed in different ways, and indeed they're controlled in different ways. Let's move on to the first section, or first main section, if you will. So public sector organizations. I think the example I gave, obviously, let's say a school. Now, let's look in detail now at the purpose of public sector organizations. Note that we say here that these goods and services either cannot or maybe even should not be provided by private sector bodies. So, for example, if we think about the National Health Service in the UK, certainly there would be concerns if the National Health Service was privatized. In other words, perhaps it shouldn't be privatized, because that would lead to potential problems, for example, with those who cannot afford fees, any fees, or even high fees for the provision of standard medical services. Okay. The next area here, which is certainly an issue for public sector bodies, is given the fact that we really don't have, a principal sort of stakeholder in the form of a shareholder desiring profit and return, etc. Really, what we do have is many, many, many different stakeholders. Any entity, whether or not it's public or private, is going to have a myriad of stakeholders. The problem for public sector bodies is many of these stakeholders will be shouting for their own rights, and many of them will, broadly speaking, have the same sort of level of power and or interest. And unfortunately, their objectives may well be conflicting. So what type of stakeholders are we talking about in this area of public sector bodies or public sector organizations? Well, there's quite a number of them. Obviously, I guess in one sense at the top, given the fact that they are government owned or government run, the stakeholder that is most important will be the government. And indeed, the level of power and interest, if we bring in reference to Mendeley, will be very, very high. At the end of the day, governments provide these products or services for a good purpose, and they do need performance. I guess linked into the government will be civil service. So the idea of departments, in effect, I guess, within the government that assist in the running of these public sector entities. The next key stakeholder, obviously, is the public itself. In other words, these entities provide these goods and services for the public. So the public will have a very significant say-so in indeed how these entities are run, and indeed, I guess, the quality of the goods and services that are provided by these entities. The next area is employees. In other words, the employees of these public sector bodies. These are key stakeholders. They need to be looked after. Perhaps the level of power and interest relevant to these employees of public sector bodies is slightly less, for example, than maybe the public or possibly the government for sure, but nonetheless, these are key stakeholders and their objectives may be slightly different to others. The last area is taxpayers. Now, this is interesting because, albeit for the fact that we have these public sector bodies providing these goods and services to the public, and indeed run by the government, managed by, let's say, the civil service, the funding really comes from taxpayers. So taxpayers are very, very important. They can't take away funding as such. Tax is tax and needs to be paid. But certainly taxpayers, all taxpayers, whether or not those taxes are direct or indirect, know that part of their tax goes towards the running of these public sector bodies, whether or not it's schools or hospitals or anything else. So they have a high degree of interest in indeed what happens, and indeed they have a certain element of power too. So those are the main stakeholders associated with public sector bodies. As we have seen, excuse me, there's some issues here. Basically, conflict, people, stakeholders connected with these bodies wanting different things. Now, in terms of the sort of performance area, we touched on this up top and we said that, well, performance for a public sector body is slightly different. We're not about measuring figures in a profit and loss account. We're not about looking at a balance sheet and looking at the difference in the net asset base year on year. We're about value. We're about value for money. And I touched on the area of the 3 E's. So, given the fact that we don't have that pressure for month on month, quarter on quarter profit making, how do we measure or how do we encourage good performance? Well, a couple of solutions, and these are in play in many public sector bodies across many, many countries across the world. I mean, the first thing is systems or performance management systems. That may well be tied into the 3 E's, but at the end of the day, what gets measured, as we know, gets done. So, comprehensive performance management systems within public sector bodies are going to assist us. The next area is something that is, become more and more relevant in the last 20 to 30 years. And really, we can think of areas such as the balanced scorecard in this respect. But we're talking about the importance of factors that are outside, I guess, of the numbers, outside of the financials, as it were. So certainly building metrics and indeed KPIs in the area of non-financial targets for public sector bodies is important. Now, financial targets are also important, but we need to combine the two. So outside of systems that manage performance, perhaps looking at other metrics, KPIs, etc., not just the numbers, not just the bottom line, as it were, not that that bottom line is profit, inspection or inspectors. In other words, having suitably qualified individuals that actually inspect entities that are within the public sector, whether or not that's in a school or elsewhere. So there's some possibilities to the issue of there not being pressure to perform, and indeed, a solution or one solution to that in the main. Let's look on to the next area here is third sector. So we've touched on private. We've gone through the area of public sector and touched a little bit on possible solutions and indeed issues. What is this area of NGOs? Remember, non-governmental organizations. What do we mean by that in terms of a definition? Okay, so quite a significant definition up here that, as you can see, I've just cut and pasted. So really what we're talking about here in terms of third sector is really any non-profit, note, voluntary citizens group that is sort of organized at any level, whether that level is local, national, or indeed international. So these not-for-profit groups will be certainly task-orientated and definitely driven by individual volunteers with a common interest. It may well be that they perform a variety of different functions or humanitarian functions, for example, let's say the homeless or other charitable causes. They certainly highlight the problems associated in each of these areas, and indeed, they push forward a sort of a manifesto to, advocate and monitor better policies and indeed, encourage political participation through the provision of information. So really, NGOs are sort of bodies or groups that have some sort of interest, some sort of concern over a particular area. They band together and indeed try to provide whatever that service is, perhaps the gap in the environment in relation to that service, whatever it is. And then they push forward that manifesto towards governments and indeed other areas of the public as well. Okay, so there's the definition. What about the sort of, purpose? As we said up top, certainly, meeting needs that are not covered by the private sector or indeed the public sector is where this third sector are at. Outside of that, as it mentioned within the definition, invariably sort of formed voluntarily. Secondly, and this is quite important, really need a need for independence, independent from outside influence, certainly not involved in the normal sense of the word with political parties, and clearly not for profit or gain. I think this is a gimme, obviously not involved in criminal activities. So in essence, the purpose of NGOs, the purpose of this third sector area is, broadly speaking, to really deal with the need, deal with something that needs to be dealt with that hasn't been covered or dealt with either by the private sector or indeed by the public sector, and tending to operate really on a completely independent basis with no ties in any way to either parties, political parties, or indeed government bodies. What about stakeholders associated with the third sector? Well, several areas here, and indeed, as we said up top, in relation to public sector bodies, certainly a lot, many different stakeholders, and all of them note with different needs. That can lead to conflict. Who would be the main ones? Well, certainly, agent and principal. And we saw from the earlier chapter, what we mean by agent and principal is really where an agent or a person or persons are sort of employed or tasked with carrying out some sort of duty for a principal. In other words, really, let's say, for broadly speaking, if we think about it in the private entity sense, as sort of an owner. So the typical standard agency relationship within the private sector is going to be directors versus shareholders. Now, in this context, in terms of agent and principal, I guess in one sense, you're talking about the idea of, boards of trustees, or let's say boards of governors, sort of been tasked with the running of these voluntary entities on behalf of several stakeholders, for example, on behalf of any beneficiaries, on behalf of any donors of funds, etc. Indeed, that links into the whole issue of the members and indeed the beneficiaries. So really, in terms of stakeholders, I think within SBL exam questions, you'll need to delve into the information that you're provided with in the unseen and indeed in the pre-seen, and really decipher who are the main stakeholders involved here, and indeed what are their levels of power and indeed interest. What about performance of NGOs? As you recall, when we set up top, when we looked at the table, as it were, we talked about value, or indeed value for money. So in terms of the performance of NGOs, well, we're going to have to choose metrics in some way, shape or form. Key metrics. I mean, just because it is a voluntary organization and just because it doesn't have a profit motive does not mean that we don't need to have some sort of performance measurement system. At the end of the day, and indeed on top of that, we've got to think about cause and effect as well. And what I mean by that is certainly in terms of performance, different actions can have different reactions, and it may well be difficult to establish on behalf of an NGO. Let's just say that they feel that the last 12 months have been very, very successful in terms of their cause. Let's say it's a homeless charity that houses homeless people in a particular country or city. It may be difficult sometimes really to pinpoint the cause of that success. That's what creates a problem. There are so many factors that go into, for example, the area of housing homeless people. So this creates a little bit of a problem as to the direct link between what NGOs actually do and their success or lack of success. That's a problem in performance for sure. Moving on from there, in terms of leadership and indeed objectives in leadership, this is quite an interesting area. We know from our past studies that, really a strategic objective is about something that is long term. It's about, achievement over the long term, not this week, not this one. It is strategic. By implication, strategic issues are long-term, very broad issues. So, given that definition, what's the problem here? Well, I guess the problem is that while public sector bodies are controlled and, I guess, set up and run by governments, they're not really sort of stand-alone, as it were. I mean, as we've mentioned, there are a myriad of other stakeholders involved in some way, shape or form. And it may well be that these stakeholders add to the pull on the operations of the particular public sector body. In addition to that, in terms of the running and indeed the objectives, is that clearly where we have, let's say, a public sector body that has been set up, for argument's sake, by a particular government, then, there is that degree of outside influence, leaving aside the whole issue of the entity or the public sector body been run by a set of individuals, whether or not they're public sector or not. It's that outside influence and accountability that causes the problem in a strategic sense. So in terms of governance or how things are done, what would we suggest here that is relevant? Well, I guess for governance arrangements, I guess first things first, we're not really reporting to or encumbered to, shareholders or institutional investors. We know in real life that for, let's say, listed companies, that in terms of governance, and governance or corporate governance obviously being the way in which an entity is run or indeed managed, there's no sort of link between a top shareholder or top set of institutional investors who are clamoring for dividends, etc. There isn't. They just don't exist. So in terms of governance, who does exist? Well, the governors, board of governors, or let's say the board of trustees. Now, for these two, really, you could read, I guess, board of directors for limited companies. So within this board, what are the key objectives, or indeed, what should they be? Well, in essence, as before, as you would have with a private entity, clearly monitoring and keeping an eye on directors is important. In the same way that over the last 30 years, when we've seen within corporate governance a series of scandals, I'm talking about scandals within for-profit entities, within the private sector, whether that's Enron or Barings Bank, etc., etc., etc. We've also seen certainly some horror stories in the public sector, and indeed in the third sector, whereby, let's say, unscrupulous individuals don't act in the right way, even though that they've been tasked with this job within the public or indeed third sector. So, certainly the objectives of the board: monitor the directors, make sure that they're acting correctly. And in addition to that, I guess the strategic directors must link into overall long-term performance. Okay? Let's look at the next area here is control, or indeed democratic control, how these entities are controlled. Now, we know what democratic or democracy means. Let's take a first look at their role. In other words, the role of public sector bodies. That, to a large extent, is going to be determined by, or possibly even changed by, public debate. Generally speaking, if we're talking about countries where democracy is in play, then this role is going to be impacted upon by what the public think and what is in the public domain. Outside of that, certainly, the role can be influenced by the type of political party. You'll be aware, of course, that when we think about left-wing or socialist, they would tend, obviously, to prefer a larger public sector. They want more action in the public sector, more services or goods being provided by government-owned and government-backed entities. On the flip side of that, if we think about conservative parties, generally speaking, a little bit looser. A move towards privatization and indeed the public sector. Again, this is quite broad, but the public sector playing a lesser role rather than more of a role. Okay? Excuse me. Let's move on to the next area in terms of the areas of debate. Well, first things first, if we have an open playing field and if we have options, certainly governments need to decide what services should be provided through public sector bodies. I mean, it's not set in stone. To some extent, it's open to government. So the key first point in relation to, this whole area of democratic control over public sector bodies is what should we be providing? And indeed, linked into that, subject to what we're providing, is what level of independence or autonomy is required, is necessary for that particular public sector body. Okay. Next key area for us is, a need, I guess, for transparency. Now, we touched up top in relation to governance, and we know that in a broad sense, it's about the direction and indeed control of entities, more often than not referred to within the area of private entities. But, democratic control and transparency in the way that you operate is also important for public sector bodies. This is an essential area. We cannot have a public sector body, even though it's government funded, government owned and government run. We can't have it not being transparent. We need to be able to see what's going on, and we need to be provided with information. After all, the funding is coming from taxpayers' money. So, given the fact that it's essential, how do we achieve transparency within these public entities? A couple of things. Holding debates in public, as an example, and we've seen that in several countries, not least, for example, in the UK, in relation to the to various areas. Okay, so outside of holding debates in public, whether or not the public are involved in that debate or not, consulting the public or consulting citizens. In other words, asking the public what they think. This is a key area to sort of uphold that principle of transparency, which again, as mentioned, is essential for the idea of good governance. In terms of political influence, as we can see here, and I've just cut this from the actual text, political influence, what we're talking about there, broadly speaking, I guess, is lobbying. Okay, the idea that individuals or groups can sort of influence politicians and it can influence policies. So what sort of ways would an entity or an individual involve themselves in lobbying? Well, first thing is, sort of running campaigns in some way, publicizing campaigns, perhaps meeting with politicians. Outside of that, if we can't meet with them, then certainly sort of communicating with them or indeed corresponding with them. And then the fourth one, probably a little bit tricky, but certainly, financing or providing some sort of finance or, if you will, kickback to politicians for their own complaints so that they remember us. Remember, as I've said, that this is a little bit contentious, could be illegal in certain countries, but does happen a lot for sure in the US and indeed the UK. The next area for us is privatization. And so how does this tie in? Well, we're on the area of democratic control. And really what we're talking about here is opportunities, let's say, for a given government to privatize, to really sell off some aspect of a private or a public body. We're talking about transferring assets owned by the state to the private sector, sale. Examples of this, and we've seen this many, many times over the last 30, 40 years, certainly telecoms, gas, water, etc. Now, in terms of privatization or decision to privatize on behalf of governments, several advantages. Certainly, it could be argued, but again, we're generalizing, that transferring aspects of the public sector to the private sector may well lead in better efficiency, better operations. It may well be that you're dealing with a private company that are absolutely experts, world class, best in class in that field. So efficiency may well go up. The second point is funding. Clearly governments are funded by taxpayers' money, and there's a lot of pressure on governments to spend wisely. If we're pushing some area within the public sector out into the private sector, is highly likely, pound to a penny, there's likely to be on an ongoing basis, more readily available funds. Okay, so there's some advantages. What about disadvantages? And there are several as well. So in terms of disadvantages, one problem if we were to push out aspects or areas of the public sector into the private sector or the private domain, then certainly you're leaving yourself open to, companies, perhaps private sector companies, messing around with price. And indeed, linked into that, the possibility, particularly in relation to the board, remember, board of trustees or board of governors, possibly short-termism. It could be perhaps that the board of trustees, stroke governors, maybe are rewarded in some way on performance. Maybe they take a short-term view, whereas in fact, we don't like the word short-termism. Things should be done, particularly for large entities such as NGOs and indeed other third sector areas. Things should be done from a long-term perspective, not in relation to, for argument's sake, a possible bonus in 1 month or indeed 3 months. Okay? Let's move on to our next area here is public value. Now remember we saw this word, didn't we? Value early on when we were looking at the characteristics of the public sector and the third sector. Let's explore a little bit further now. Now, we should know that certainly within the public sector, obviously profit irrelevant, but the problem with that is, let's say that funding's coming down from its head office in the form of millions and millions and millions of taxpayers' money. You could come into a situation where you see this type of mentality. In other words, the idea that because more than likely funding from government for public sector bodies is made on a periodic basis, possibly annual, and indeed that budgets, etc., are prepared. It could be that the Board of Trustees or the Board of Governors or indeed general management within given bodies decide that really we need to spend all of our budget because perhaps we won't get it back next year. So this is a major problem. It's a use it or lose it mentality, i.e., well, we're 20% below our budget, but ideally, we could spend it now. We spend it now. At least we've spent our money on what we think we need, whereas the money could just have been saved. So, there are differences with the public sector for sure. Now, let's take a look at this value for money area. Let me just make this a little bit bigger for you. Bear with me. So this is the area that I spoke of several times, and it's really the 3 E's. So if you remember from the first table, or indeed the first chart, the problem that we have with public sector bodies, and indeed, I guess, third sector, is how to measure performance. And what the 3 E's do is give us a sort of a grid, if you will, okay? Now, if we were wheeling these out for a particular public sector body, and we're thinking about this, means delivering the required service on budget, on time, and within other resource restraints. In essence, what we're talking about there is inputs. So think about it in line with, say, a hospital. The inputs will be, let's say, in the main, wages of all staff, doctors, nurses, etc. So we're talking about the amount of input, and we might compare input in year 1 to, say, input in year 2 and wonder why it's doubled or tripled or whatever, okay? So the bottom line is that, delivering value to taxpayers is important. Taxpayers can create problems. They can create a fuss. In terms of the next area, it's, efficiency, right? So really what we're talking about there is the return on the resources invested. So if you will, efficiency is about the relationship between inputs, as mentioned with an economy, and indeed outputs. So as they say here, how much output is delivered for a given level of resource input. So this is inputs and outputs. First one, just inputs. And I think we'll find when we look at effectiveness, that effectiveness is really about outputs. So it says here, the extent to which objectives of the service are achieved. So, for example, with a hospital, do we have success in terms of treating patients reasonably quickly or within a good time frame and curing them? That's our effectiveness. So really, number 3, effectiveness, is about outputs. So economy, inputs, efficiency, input and outputs, the relationship, and indeed effectiveness, just outputs. Okay? So really, that concludes our run through of Chapter 8, quite a short one for us, public sector governance. In terms of what we've focused on in here, I think the main areas for us are, the three-way split and indeed the differing characteristics between each of the 3 parts in that business environment. So let's focus on doing questions. I don't think that we need to rote learn everything in every mind map, but certainly rote learn some areas, particularly in terms of definitions. That would be my best advice to you. Okay? Many thanks for listening. Please do join me soon for Chapter 9.